Hello and welcome to KYC, a brand new show at NDTV Profit. In this fast-paced world of stock markets, investors are bombarded with information, but what they often lack is a deep, comprehensive understanding of the companies they invest in. Know Your Company is a show designed to give you regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every day. Today, we are going to talk about PB Fintech. This is the one which is very popularly known as one which runs two platforms specifically, policybazaar and paisabazaar. So I'm going to very quickly take you through what each of these platforms does. So as far as policybazaar is concerned, that's perhaps the more well-known website in this case. Of course, it's an insurance comparison website where you do have a lot of insurers come and all who are interested in picking up insurance, you will be able to compare the various schemes that are available as far as that's concerned, and you have the ability to perhaps make choices there as well. It's India's largest digital insurance marketplace at the moment, and it has over 90% market share, and it looks at insurance that would include life, general, medical, and so on and so forth, including auto for that matter. Paisabazaar is the other one, which in fact provides a variety of loans and credit cards. This is again an interesting one because this is where you have the debt market come into play, and not unlike what we see in policybazaar, paisabazaar also partners with large banks, NBFCs and fintech lenders, and what they do is they provide a wide choice of products across personal credit categories as well. And of course, it's a digital consumer credit card marketplace, so that's something that you need to keep in mind as well. All in all, the company is also ventured into certain other newer businesses. So when it comes to its core business, about still a 2/3 of its revenue still come from core businesses, and it was FY24 in which we started to see a large chunk of the new business start to contribute as well as far as PB Fintech is concerned. But, let's move on and talk about a handful of factors. And what we usually do is we take all these companies and we assess these companies through the lens of the financial statements, as well as various other fundamental parameters to gauge to how the company has done so far. In this case, we'll be separating out income statements and profitability because, well, it's a platform. Of course, we'll be talking about balance sheets and cash flows as well. But moving on, of course, we talk about shareholding, how the shareholding pans out, the valuations picture as well, along with street coverage and street credentials. And for that, of course, I'm going to get in my colleague Harsh Saita to also take us through and give us a little bit more insight with respect to some of these aspects. So, Harsh, welcome to the show and thanks for joining. And let's start with what you make of profitability, rather let's start what you make of revenue and then move on to profitability.
Yeah, in fact, let's pull up those numbers, on the revenue count. If you look at the revenue over the last 3 years thereabouts, it's literally gone 4x. So from sub 900 crore, the current revenue for FY24 was roughly 3,400 odd crore. For just a couple of minutes, I'd request you to ignore the EBITDA and PAT number for now. Just look at the trajectory of revenue growth. It's been very strong in that sense. FY21 was 885 crore. New business within FY24 contributed just 1%, which is 12 crore. That new business has now become a third of the company. What are these new businesses? Some new businesses also include international operations, something like a Dubai. It also includes the agency channel, which they've started off, where you can call PB Fintech helpline numbers and book your insurance that you require basis your need. So a couple of those have really helped the top line, and that's what we are seeing growth in. So from the 12 crore number in FY21, new businesses have gone to 225 crore in FY22, which is 20x, then 848 crore in FY23, which is 4x on top of that, and then you're at 1,060 crore in FY24, which is another 25% growth. So extremely robust in that sense, and overall the revenue number looks very, very solid. So that's a clear thumbs up with regard to the revenue number because it's gone up in such a solid fashion. The guidance for revenue as well continues to be solid at 30%. So you'll continue to grow at 30%. That's the opportunity that management is seeing, and therefore clear thumbs up where revenue is concerned. Very important for platform companies to scale revenue, but along with it, scale profitability as well. And that's our second metric, and I'll try to cover that as well. So now, if you can look at the EBITDA number, the way in which EBITDA has gone, that's a negative EBITDA number, by the way. And therefore, from 295 crore negative, it's gone to 662 negative EBITDA. And thereafter, it settled it in at around 186 crore of negative EBITDA for the full year. And therefore, what you're seeing is that you're seeing an improved trajectory where margins is concerned. If you can pull up those margin numbers, you'll see how margins have improved on a year-over-year basis. And now you're starting to see margins at a negative 5% as the company edges towards that guidance of 1,000 crore profit after tax by FY27. That's going to lead to a push with regard to where profitability is concerned. So growth will now be focused more on profitability, Agam. So right. Growth, thumbs up, but even profitability, a thumbs up, because the manner in which they've been able to go about this underwriting more profitable growth is what really stands out.
Right, sure, fair enough. And point taken. Let's talk about the balance sheet then, and it does have a strong net worth, about 6,100 crores in terms of its equity shareholders funds. It has a debt of around 333 odd crores. It's a relatively lower amount of debt, and in terms of cash, it does seem like it's cash rich, standing at around 5,400 crores in terms of the cash that it holds, which means that the debt in this case is of less significance. Of course, I'm sure that it will require that amount of debt to perhaps run its operations to a certain extent, but it does seem like it has a fairly large chunk in terms of its cash, and that's why we're going to give the balance sheet a thumbs up. What can you tell us about cash flows, Harsh?
Yeah, it's as expected. Just how operating metrics and profitability is improving, the cash flow is also improving. But there's one big catch here. So one is you have a positive free cash flow now, but the big catch here is that you're going to invest $100 million in the hospitals business. Now, this is new. Yeah. They've done new initiatives in the last 2 to 3 years where margins have seen significant decline. You'll want to look out for that as to what happens with regard to the fresh deployment of cash that they're going to do, which is roughly around 1,000 crore, 900 crore odd. That's the cap they've kept as part of their board resolution. So that $100 million utilization within the hospital business, how quickly are they going to do it, and what is the impact of that on overall numbers is something we'll have to look out for. So that's point number one to look out for where cash flow is concerned. The other, therefore, out of the 5,400 crore of cash available today, you'll roughly, post utilization of this 900, you'll have 4,500 crore of cash. So on the cash flow front, slightly iffy because they keep utilizing cash in some of these new ventures, and therefore I'm giving this a neutral. I'd want to see a more steady state cash flow where there's more certainty to where they're deploying cash, and hence a neutral on this one. In no count bad because they've done well on the top line whenever they've done this, but a neutral nonetheless.
Sure. So now that we've covered your key financial statements and how things have potentially panned out at the moment, let's talk about a handful of numbers beyond these. So we're going to talk about shareholding. Now, the company doesn't have promoters. It is held widely by institutions. Foreign institutions hold about 48%. And domestic institutions hold about 20.6%. I was actually looking at the quality of institutional holding to see whether or not it is well diversified. It's not that just a handful of entities hold a PB Fintech. So that's the first thing that comes into play. In terms of FIIs, you have names like Tencent, Vanguard in the past, of course, has held the company. We've had New World Fund also holding a substantial amount, but it's fairly evenly distributed across more than a handful of institutions. Even if you consider the domestic holding, and that stands at around a little over 20%, we're looking at your key AMCs like Axis AMC, Mirai AMC, something like an HDFC AMC as well, along with Franklin. All of them hold a good amount of funds, rather will have shareholding in the company. Of course, given the fact that, once again, in terms of DII holding is well diversified, it's a positive. Which is why I reckon the only issue is that well, nearly a third of the holding is still with the shareholders, and that perhaps is the reason why we're going to give it a neutral rating and not necessarily a thumbs up at the moment, because about 31% is still out there with the public. So we'll give it a neutral, but let's come down to perhaps
Agam,
the
I'm
most
just,
important.
sorry, I'm just going to add one quick point to this.
Yeah.
So for viewer perspective, Naukri holds part of PB Fintech as well,
Right.
of course. And when you're looking at the founders, which is Alok Bansal as well as Yashish Dahiya. Yashish Dahiya holds around 4.3% of the company, and Alok Bansal holds around 1.4%. So combined, that is not enough comfort, of course, as you rightly mentioned.
Right.
But Naukri also holds a stake in this one, just for viewer perspective.
Yeah,
of
so
course,
no,
you've
so
kind of covered
absolutely
most of it.
So
but
valid points
just
there.
thought.
In fact, the fact that the people who run the company also have a shareholding, of course, makes it an more important of a factor here. But yeah, I was going to come back to you on valuations, Harsh.
Yeah, this is going to be an interesting one. This was a tough one to break down, frankly, Agam,
Yeah.
because valuations for these new age internet businesses anyway very, very hard. They keep burning money.
Yeah.
And therefore, what I've tried to do is I've tried to build my own valuation thesis to this. 77,000 crores, the rough market cap at this point. And if I can just look at the cash balances, we spoke about 5,400 crore of cash, of which 900 crore roughly to be utilized in the hospital business. So let's currently keep the cash balance at 4,500 crore. On a standalone basis, as of today, the company's market cap ex cash is around 72,500 crore. So you're roughly outside of the cash that you're getting for purchasing equity or purchasing the business, you're purchasing it at around 72,500 crore. That's market cap net of cash.
Right.
Now the company's guidance is 1,000 crore rupees of PAT by FY27. Now, with the 5,400 crore of cash, the company is generating roughly 350 to 400 crore of other income annually, which also contributes to top line. Now, which also contributes to bottom line, I beg your pardon. And therefore, I'm going to remove that from the bottom line, right? And at the lower end of the band, 350 crore is what I'm going to take. Remove that from the bottom line number of 1,000 crore in FY27, leaving us with 650 crore of core profit after tax on the basis of a market cap of 72,500 crore. I hope this explains clearly how I'm trying to value this. And therefore, you have a profit after tax of 650 crore FY27, and therefore the company trades at 110 times this adjusted profit after tax, which I have adjusted for cash, 110 times FY27 profit. But at a 30% growth clip, is this kind of valuation justified? Is a question, of course, that viewers and investors have to think of. But essentially, that's how the valuations line up. Of course, no comfort with regard to that number, and therefore have to give it a thumbs down for now. But nonetheless, you may want to really rework the numbers to FY30 and see how the numbers really change.
I mean, I don't even want to imagine what it was trading at just about a few weeks ago.
Yes.
At around the levels of around 2,100, 2,200. So,
yes.
Yes, point taken, absolutely, Harsh. There's no doubt about that. Do remember, this is 2 years down the line. So, this one is certainly going to be a challenge. But I'm going to very quickly take you through street credentials. It's going to be an up because the street is positive. We have about, we have seen growth despite the recent correction, about 84% growth on a year-on-year basis. As far as street is concerned, they are largely positive, but I'm going to actually then, well, okay, so this is a mixed one because they're just 8 buys, 3 holds and 9 sells. So they're not completely positive, but with an upside entailing of around 3.7%. So I reckon the street at the moment is also concerned with the valuations at which PB Fintech is currently trading. And hence we're going to give the street coverage a neutral rating, not necessarily a negative one. Yeah, that should bring for you on your total score out there. And in terms of all the parameters that we've spoken about with respect to PB Fintech, well, we have an overall rating of 5.5 out of 8, if I'm not mistaken. So there you have it. We have these thumbs up, and along with that, valuation, of course, not looking that amazing. Let's pull up the total. And yep, 5.5 out of 8 is what we are looking at as far as PB Fintech is concerned. So good prospects, but it's still very expensive. But with that, Harsh also spoke to the management of the company. This is what they had to say. Listen in.
So if you look at our business, see, we do all retail lines, and the growth is sort of driven by both health insurance and life insurance business units. Uh, we don't see any reason it not to grow at the same pace in future, and we have always maintained that 30% is a very good growth rate for policybazaar sort of businesses. There will be quarters where we will be growing faster or slower across different business lines, but overall, if you combine every business line, we hope that we are able to deliver 30% sort of a growth rates across years. And that's been the case if you look at last 5-10 years of Policybazaar sort of growth numbers as well. Uh, See, the way we look at our business, to be honest, is there is huge amount of customer need for these products. So you have to work on three parts. You have to work on product innovation with your partners. You have to work on removing all the friction from the buying process so the customer can obviously go through the transaction much easily. And you have to work on the servicing element, which includes the claim as well. If you're able to do a better job for all three, uh, more and more customers will come to you and they will in fact transact through you. The whole promise around the claim support that we have been able to deliver, and along with that, the focus on regional languages, the focus on physical meetings, along with call center support that we have been able to achieve over the last 3 years, has resulted into a very high growth rates over the last 3 years. And that's what that seems to continue for now. And we hope, as I said, 30% plus sort of growth rates in coming years as well.
Okay. So, sir, I'll touch upon those couple of factors that you spoke about. Those were new levers for you.
Yes.
Having a call center to answer customer questions and therefore push the insurance product out into the market, make it easier for your customers to understand the product better and understand the right product and buy it. What are the new levers that are going to come on stream which gives you the comfort that a 30% growth, maybe for the foreseeable future, it can be 3 years, it can be 5, you can put that number, but what are those levers like? Because you've unlocked a few levers in the last 2 to 3 years.
There is nothing specific like this one thing will drive the growth. I mean, if obviously we had known that there's a single one lever, we would put more effort on that one thing. But it's a multiple thing which come together. So, like if a customer wants to have a physical meeting and we are able to enable that, or if we are able to talk to people in their local native language, those are very big positives. But would that one factor determine that we grow at a particular pace? Most likely, no. Similarly, the whole claim experience that we are able to deliver today, we have about 600 people who are focused on customer claims and customer support specifically. So, those are things definitely keep on adding up. It adds to your brand, it adds to better conversion. Uh, you know, we as I said, we don't look at one factor, we look at the full value chain and we see how do we give a better experience, a better product to customer across the whole value chain and control more and more of the customer experience. Uh, I'll give you a very simple data point. See, if we think about health insurance in India, typically health insurance is about 10-15% of GDP every country. India also is no different. About 300 billion plus minus goes into the whole healthcare industry. Includes hospitals, includes pharma, includes everything. In any developed world, you'll find that about 30 to 40% of this is paid by insurance companies. So that determines the size of the insurance sector, health insurance sector per se. So from that perspective, if we look at Indian numbers, we'll say about somewhere between 2 to 3% is paid by the insurance companies. Right. So there's a very big delta in terms of where we could be from health insurance perspective and where we are today. Right. Similarly, if you look at term insurance, again, very under-penetrated. So the scope to grow the industry, and if industry grows in these direction of protection, it definitely helps Policybazaar because Policybazaar is sort of the first port of call for customers when they think of protection products. So we remain confident that 30% growth rates is possible till the time we keep on doing what we have been doing and become better and better at delivering the different parts of value chain.
There you have it. That's the management of PB Fintech telling us about what's in store for the company. But we are out of time on this edition of KYC. But lots more lined up on the other side. Stay tuned to NDTV Profit.